Good morning, everyone. Good morning. My name is Mathijs Flierman. I'm the head of capital markets for Cushman and Wakefield for 10 years here in Amsterdam, and I'm honored to elaborate a little bit more today about the Dutch performance of the real estate market, and about the active players in the Netherlands, and also about an outlook for 2018. First of all, capital flows worldwide. This is a graphic not specifically made for numbers, but to show you the capital flows around the world. You can see that in Asia, the largest part of the capital flows goes into domestic. Next to that, it's Northern Americas, and then we have Europe. Europe is the most active market for cross-border investments, and almost 45% of all investments are made by cross-border investors. If you compare that to Northern Americas and Asia, that's only 15%. So you can see Asia, domestic players are taking the main share of the market. Then Europe. For the first 6 months in 2017, there was invested 132 billion by cross-border investors in Europe. The largest part of that, 69 billion, was done by European investors that invested in Europe, in the continent, but not in their own country. Secondly, almost 39 billion came from the US into Europe, and then followed by APAC and Middle East. So, what if you are a foreign investor and you want to invest in the Netherlands or any country where you want to be invested in? You want to know that market, and one slide back, you can see here how we did that. So, foreign investors, of course, want to have fundamental information about countries. And what we did with the research team in London is that we compared 50 countries and 6 main fundamentals for each country, such as GDP growth, inflation expected, trade with the US, political statements, etc. So what you can see is that out of that research, the Netherlands came out at a number 3 position, and the red is if you're ranked within the top 10, less riskful, and if you're grey, and you can see that below, then you're in the last 10 of most riskful countries. So the Netherlands, the scores of the Netherlands as number 3 player is an average. So we are one time in the top 10, but overall we're very average. But nevertheless, we are in the top 3. Then over to the investment flows for cross-border worldwide. You can see out of the 40 most popular countries, Netherlands takes the number 7 position overall, behind the US, UK, Germany, France, and Australia. So you can also see that the continental and global players cross-border take almost 10 billion out of the total investment volume. And that is, of course, very spectacular. We have also other ratios to see what kind of position the Netherlands takes. And for instance, if you would take the investment volume right now in the Netherlands, 20 billion expected for this year, if you would divide that by the total supply in the Netherlands, we would by far be the most popular city or popular country of the world to invest in for cross-border investors. Then a graphic that I think is very popular by researchers. Everybody's talking about investment volumes. This year expected to be roughly around 20 billion in total. So it goes for all sectors, not including owner-occupier, not including shared transactions or loan sales. What you can see, of course, is that from 2013 to 14, the investment volume in the Netherlands almost doubled, and since then increased very rapidly every year. One of the main reasons for that increase in investment volumes in the Netherlands is that since 2013 we have private equity players in the Netherlands that bought a lot of office real estate, and because of the holding periods, which is between, let's say, 2 and 5 years maximum, they flip over their real estate really quick. So you see that every year you see a total flip over of transactions that might seem new, but it is not new, it's just repeatment all over. And I can assure you that for us brokers, this is the ideal situation. So we flip it over as many as we can, and I think in the last 5 years we have seen some buildings flipping over 3 times. So you can imagine how fantastic we might feel. Then something about the capital flows, the Netherlands, and to the segments and categories of all investors. So during the crisis, you can see 2008 till 12 that the Netherlands was purely domestic players. Everybody during the crisis invested in the Netherlands as domestic players, and then you had a little treat of the foreigners. From 2013 on, private equity came, US, UK, and of course some others, and that's increased. So 2017, a lot of US, UK money is invested in the Netherlands. The part of the domestic players is reduced, and the white at the top is others, and others is seen as Koreans, Japanese money, and money from Singapore, first sponsor for example. And we have seen Brazilian money flows from everywhere. So what about 2017 and the summary of that? So of course, new record for investment volumes in the Netherlands. We have never expected that, never seen that before. And I think that we can say by now that the Netherlands is the most popular real estate destination worldwide. A lot of countries might disagree, but I think based on the numbers, I think that we can take that ranking and that position for 2017. What is quite spectacular is that 65% of the investment volume is done by cross-border investors. And so summarized, it's 2/3 of the investment volume done by 1/3 of the investors. So the average investment volume from cross-border investors is roughly 52 million per transaction, and the 67% of all transactions is domestic, and they take an average of 13 million. And an explanation for that is that there's a lot of private investors that are doing the smaller transactions in the Netherlands, and they are more or less invested in all kinds of categories as retail or secondary offices, also healthcare, which is very small transactions. But very important, the stable economy is the driver of this all. Then, of course, something that agents would like to love to talk about, transactions. To bring it into details, standing today at the Atrium building, we were located as Cushman and Wakefield for almost 10 years in this building. So it's the first time for me to be actually in the new extension of the Atrium building. Looking back, Atrium building, 2005, almost before the top of the market, transacted to Quinlan, roughly 200 million, 4.9% back then. Gross initial was best ever achieved on the south axis. Then in 2013, Icon Real Estate bought it, 95 million. And this year transacted by one of my team members for 500+ million to the Koreans. Amundi was organizing the debt and equity, and so roughly transaction 4% gross initial yield, which is, of course, this is the largest single asset transactions this year, spectacular deal. Secondly, last year on the retail, Sintrus unfortunately didn't make it with the 1.1 million retail transaction with Ronnie Rosenbaum, but this year CBRE Global Investors did make it and bought the Rembrandt portfolio for roughly 1.6 billion from IF and Bouwfonds. Also, hotel market, very hot at the moment, especially in Amsterdam, because of the tourism, of course. We, I think it was now 6 weeks ago, off market, transacted the W Hotel, 260 million from Deka, private investor involved. Transaction roughly around 4% gross initial yield. And what you can see is that a lot of investors are willing to pay more for transactions if they can be done off market. On the other side, of course, you have a lot of sellers, which might be institutionals, and they simply can't do off-market transactions because they need the transparency. And transparency, although it might seem a little bit rare, is not always the best performer. So logistics, new headquarters of Lidl, 15 years lease of the headquarters to be built. The guys are here in the room. Is it correct, or is this fully bull? Sorry, no, you don't have to answer that.
Because it has been built, it's in occupation now.
Oh, very good. Now, here. Good for you. Champagne is on your side. So,
logistics and 9 months building time.
So, oh, that's very, very good. Then outlook for 2018. We think that the focus of cross-border investors will remain for the Netherlands. We haven't seen any changes, any signs of change that investors might walk away from the most popular country worldwide. So what we see on a daily basis is that a lot of foreign investors want to know more about the Netherlands. And how do they learn very cheaply about the Netherlands? They go to agents like us. So every 2-3 weeks we get free presentations, giveaways to foreign investors who you might never seen acting on the market, but they are the money behind the investment managers. So they want to know more about the markets they invest in, and they do want to know it directly from us as traders of the real estate. They don't want to have only the analysis from the researchers, but also really hands-on knowledge from the market. So every 2-3 weeks we're giving away this kind of presentations about Netherlands, about the real estate market, and what you see is that predominantly everybody wants to be invested in Amsterdam. And that is driving the market on a very spectacular way. So also for 2018, transaction volume somewhere between 16 and 20 billion. We don't have the glazed ball, but this is what we expect. We don't see any signs of that. It could be less. But of course, everybody is in search of returns. So alternative investments classes will be looked for. So talking about senior living, talking about healthcare, talking about data centers, etc. What we also expect next year is further yield compression in the G5. 5 cities, you see Utrecht now really coming up. The Hague really slowed down the last 2 years, and instead of The Hague, everybody was looking for Utrecht. That hasn't been on the map for a lot of investors over the last decade, but now it seems to be very, very hot, because we're realizing yields roughly around 5% for new real estate in Utrecht. So, and that will be driving furthermore. Even Eindhoven, you see now Eindhoven trading between 5.5% and 6.5%. Never seen that before. So that says something about, if you look back, if you look 2017, 2007, there's a very big difference. We always, 10 years later, we're on the peak of the market again, I think. And the biggest difference with now in 2007 is that in 7, everything traded. So all investors were very enthusiastic about all kinds of real estate throughout the Netherlands, but they learned their lesson well during the crisis. Banks, particularly, learned their lesson well, stepped away from risks, only interested in if it ticks all the boxes, and then you get very, very sharp interest rates. But LTVs, they roughly stick at 65%. And of course, we were used to 85, 90%, and even 100% for some transactions back in the good old days. But now you can see that investors, if it ticks all the boxes, they are really accepting very, very low risk premiums. So the fact that Amsterdam did 5% in 07 and now is doing 3.5% just means that everybody is looking for the same kind of real estate, and the money has to go somewhere. So yeah, then this kind of behavior happens. Doesn't take away the risk profile of this. So there will be some blood in the streets, I suppose, in 5 years or beyond. What we also expect is the wide yield spread. So what you see now is that really prime offices, or even retail is doing the 3.5%, but also 15% is not very unusual in the Netherlands. Just for the flavor, if you have an office building in Rosmalen for 10 years leased, or you have one in Zwolle, if it's large, let's say over 10,000 square meters, there's hardly anyone interested. There's no financing interested. So what you get is, let's say, 9.5%, 10% for a 10 years lease. So that market is not recovered yet, but I think there's a lot of interest coming for that kind of real estate, because people, they know they're looking for returns, so they are prepared to take more risks. Last but not least, what we see is that during the crisis, there's a lot of office buildings transformed, because they were vacant, structural vacant, they were transformed into hotels and resi. And because of that, we saw office areas which were very single functional, transformed in very lively areas. For example, the south axis, you see the combination between living and hotels and retail and a lot of offices. And I must say, by myself, I was very afraid of the combination, and I think 5-7 years ago we thought this will never work. People don't want to live in an area where you have offices as well, but we were wrong. People do want to live there, and what you see now, for example, in Amsterdam Southeast, that vacancy rates have dropped dramatically, prices went up, ING went in, looked for 100, 200,000 square meters to occupy, can't find space now, and that is really driving that market. But the result of that is that local governments are seeing that this mixed-use areas is very good for the future, and very good if you want to avoid a crisis and real high vacancy rates up to 30-40%. I think the next step, and that's the development we're seeing, is that we're going to multifunctional properties. So what we would like to see is, and we're trying to convince a lot of municipalities, and you see it works well, is that if you have zoning on building level that you can choose as an owner, that you want to make hotels, resi, offices in the same kind of building, in the lifetime of, let's say, 50 years, that makes a very sustainable building. And the design will be different, the materializing will be different, but one thing remains is a very high residual ground value, and that's what we need, because we don't need to provide the market with a lot of ground. We just provide the market with high quality buildings, and after, let's say, a period of time of 20, 25 years, you can transform that building into something the market needs at that moment in time. So last slide, outlook on the sectors. Retail, 80% of the rental levels is now in condition with market levels, meaning there was some slagging, of course, because of the 303 articles we have in the Netherlands. So we see that that market levels on retail have been brought back, and because of that, a lot of investors are attracted to the retail market again. Big demand in food-related shopping centers and also in out-of-town retail, which is quite new, because that was seen as the category during the crisis as walk away, and now you see a lot of demand coming back because the rents were low and didn't decrease a lot. So that was really good. And what you also see is that there is, of course, overcapacity on the retail market, and there will be focus on redevelopment, taking away some overcapacity in square meters, building back senior living, apartments, etc., because this is the place to be. These kind of shopping centers, always in the city center located, is of course very interested to increase and to expand by resi. On the office side, as said, Amsterdam, yield compression, rental growth, especially in Amsterdam, because what all these foreigners do, where we see 250 euros per square meter, they say 250 goes to 350, because there is a lot of demand coming, and one thing they're very, very interested in is if there's tenant options. If there's tenant options, they might walk away. If there's no tenant options, tenants, be aware, because these guys will be all over the place for the coming years, because you told us there's cranes. I see one, but not enough. And so there's no quality. And what we already seen, and my colleagues know, we go on behalf of tenants to landlords saying that that we want to renegotiate the contract, and the landlord just says, okay, leave, because the rent's going up. We're no negotiating any incentives anymore. The rents are just going up. And on the south axis, there's hardly anything. So if you want to move, then you better think twice. Then disposition of secondary value, of course, offices on secondary locations. You have a lot of value add, you have a lot of opportunistic. What we have seen over the last 5 years is that hardly anyone, of course you have individual cases, but in general there's no value add. So the portfolio bought by Blackstone, the profit they made is only about yield compression, not about value add. So if you're buying the right kind of stuff, so core plus, in a period, let's say 2012, 2014, you make your capital gain right now. But if you bought loan portfolios, whatever, with a lot of secondary stuff, you're stuck, because banks are only willing to provide financing on larger portfolios, not on individual cases. And then you have very small offices all over the Netherlands with, let's say, walls of 3-4 years with vacancy rates, and the only ones interested, really interested, is private investors, and they're doing, let's say, volumes up to 10 million, but that's quite challenging, and will be challenging for next year as well. Although there is historically seen very stabilized rents on logistics, because rents are only growing with inflation, it seems, is there very strong demand for very large scheme centers in Venlo, in Rotterdam, but we think for 2018 and the next years beyond, what you will see is a lot of appetite for city logistics. So e-tailers like Amazon, like Zalando, they want to deliver to their clients in a couple of hours time. So they need locations very near to the bigger cities. So this is something that will be in the near future hot, I suppose. Last but not least, Resi, of course, hot market as well. What we see is, of course, that the domestic institutional players are very keen on the newly built Resi, whereby the focus of cross-border kind of investors is all over the place, but large portfolios, existing portfolios, but they're becoming picky. They just want to be the best. So Randstad area, the center of the Netherlands, and they try to avoid, of course, the northern parts of the Netherlands and the southern parts of the Netherlands because of the growth areas it might seem.